Hey everyone, welcome to Breakout Wednesday. It is September the 11th, 2019. Now, the markets have been, pretty stagnant, pretty flat. However, there has been a lot happening internally in the sectors. So last week I spoke about the sector rotation away from software stocks, and it's continued. So I just wanted to run through, first of all, to start things off, this chart of Twilio. So Twilio is one of the leading stocks of the market that a lot of the institutions and funds have been back in, and it's this uptrend that started back in February 2018 with this huge breakaway gap, right? Massive volume, massive gap up, or the same stuff I talk about all the time with breakaway gaps, right? Breakaway gaps are good for day trading, short-term trading, medium-term trading, swing trading, and long-term investing, right? And so it's just, breakaway gap is so powerful because something explosive has changed with that company, and something good, obviously. And never during this uptrend had it come down and fallen below its 200-day moving average. Now, last week, it's done that now, okay? And then last week, I was talking about Twilio, and I was saying how I was in this tight little range here, and I was watching carefully to see if it was going to break up or break down, okay? Obviously, it broke down, right? Now, for traders who like to short stuff, it gave a pretty good signal to go short. For traders who were long, investors who were long, it gave a pretty good signal to get the hell out, right? And then it's collapsed down to below its 200-day. Now, this thing may bounce from here and go crack all-time highs, I don't know, but the facts in front of me at the moment is that money is moving out of software stocks. It's that the long-term uptrends in software stocks has been broken, and it doesn't mean they're not going to bounce and provide great counter-trend rallies and all that sort of stuff, but at the moment these long-term uptrends have been broken, and therefore they're probably going to take ages to reset. They can take years to reset, and the leaders of the next bull market are probably going to be different stocks and different sectors and all that sort of stuff, okay? Could be wrong, maybe it's going to be software, who knows, but if you look over the history of the stock market, usually it's not the same leaders, especially once they start breaking down like this, okay? So it's going to be interesting to watch it play out. Now, I could rattle through all the software stocks, Workday and AYX and all those stocks, and it's just, they're all the same. They've all been creamed the last few days, okay? Now, instead, I'm just going to move on. So I'm doing a lot of work on trying to figure out who the new leaders are going to be, and it's too early to tell. There's a lot of, I guess for the short term, there's a lot of setups in semiconductor stocks, but also the FANG stocks have been pretty strong. So even though the software stocks got hammered last night, Apple was strong, Facebook was pretty strong, Amazon was strong, and so all the FANG stocks bar Netflix are pretty strong, and and so I'm watching the FANGs, watching these big Amazons and Netflix, Amazon and Apples and stuff, and waiting for bases, and I'm gonna hopefully take signals once they give them, right? Because they're some of the biggest companies in the world. They're making huge amounts of money, and if they can show relative strength and base and give legit setups, then I'll take it. Amazon bounced off its 200-day moving average a few times, and now I just really want a nice signal on this thing to go long. And so that's what I'm doing now. The software stocks are a bit out, and the FANGs and semiconductors and some biotechs and some other random trades are setting up, all right? So that's that. Now I'm going to rattle through a whole bunch of names. Some of them I've talked about already, some of them are new, and I'm just going to, some of them are Aussie, some of them are NASDAQ. It's a bit of a jumbled up concoction of stocks, but just some interesting things happening. So first of all, EOS is the main trade I've been in lately, and I've spoken about it the last few weeks. It's still going strong. I've taken half off, and I've left half to run, and I always do that. It's something I always talk about, just leaving half to run, and pyramiding if I can, if it gives a great signal. But there's not that many. There are some out there, but it's not that many traders who can make money consistently just on really, really short term, taking profits and in the short term. It's just the good money's made in major trends and sticking with it. And I think when you look back over each year and look at the big winners, it's usually you have one or two big winners each year that just go for huge runs, and you catch them and they just keep going and going and going. And so, it's an easy way to do it. I think the really, really short-term stuff, it's fun, and you feel like a real trader sitting behind your desk, but it's just all day, long. But you got to work huge hours, and not that many people succeed at it. So I think the odds are much more in everyone's favour. Just following trends, following the major trends, sticking with it, letting the winners run, cutting losers quickly, and that sort of stuff. So EOS still in. Let's see if we can keep going. Flight Centre. Talked about Flight Centre last week, and it broke out of its Davis box, and it came back into its Davis box and it's chopping around a bit. So look, I'm trading this classic Davis. Okay, I showed the Davis box last week. The bottom's down here somewhere, and I've got my stop loss down there, and I'm being patient. So my rules with Flight Centre is trade it like Davis, have the trail the stop loss up slowly, give it room, let it do its thing. It's this is a massive sideways base here. It's not. I'm not trading this for that short-term explosive breakout where I do a lot of trades. Those trades I have really tight stop losses, and I'm just looking for that explosive break, and I'm just taking my money and I'm just running away. Like this is a more of an expensive stock that has the ability to just trend up maybe for ages, and if it does that, then my risk reward on it's going to be ridiculously good. If it doesn't do that, I'll take 1% of my 1% approximately of my account, and I'll lose it. But I think all the moving averages are sloping up, and I'm just going to give it time and just let Davis do its thing. Okay. All right. So the other one I talked about last week, and I'm pretty sure a lot of people would have traded this sucker, is Zip. Okay. So Zip had this really nice entry. Took that trade, talked about it last week in the talk when it was just still in this base here. Took the trade, entered, and then, I've bailed on this already because, mainly because, it came up and just took out its all-time high, failed to close above it, wicked on this day it wicked up, closed down, and this day it wicked up in bearish candle and closed on its low, and then it refused to close above the all-time high and then just started drifting down. So I've bailed on that. I've taken a nice quick profit that I'm happy with, and I'm just moved on. But it was a nice base, it was a nice setup, and this thing's probably going to go a lot higher in the long term. But for me it was a short-term trade, and that's different. It's exactly contrast to the Flight Centre trade. The Flight Centre trade, I'm giving room. I'm trading it a major trend with Davis. This thing's gone up so much. I'm just trying to scalp it. I'm just trying to trade explosive breaks on it. Okay. All right. And so now, I guess to say that it would have been different if this thing closed above its all-time high. I definitely would have kept some of it. All right, as a trader, you need to be flexible. I mean, my plan moving into this was to sell half on an explosion and let the other half run. But but I needed to close above that all-time high and stay there for that. I can't have it. Topping out and giving this topping candle pattern and breaking down and just holding it. That's just not, I don't feel comfortable with that. I hate seeing all that profit just wither away, right? So there's flexibility there. The plan going in is flexible, and then I'm flexible with that. Whereas Flight Centre, I'm a bit less flexible. Okay, I'm going on a bit about that, but I hope that helps explain, stop losses and how I go about it, right? So the other one I was watching last week, Zero, I was watching the ascending triangle to see what happened if it broke down or up. And obviously it broke up, right? And it had this huge explosive 3-day move and then a few massive wicks and rejections to the upside. And so I took that and I trimmed half of it, and then, I had to bail out, gap down today, and I got a pretty bloody bad feel on it today. And so it was like maybe a tiny loss on the second half. So anyway, and this is what's happening on the market at the moment. We're having a lot of false breakouts that are having initial moves and then crumbling. And so I don't think it's a bad idea to just, I always like taking half off, and anyway, I'm going to continue to do that. But let's compare that. If we're looking for relative strength, looking for things that are working, let's compare that to FMG, Fortescue. So Fortescue had this ascending triangle and broke up, and it's held it, right? It hasn't collapsed back down into it, it's held it. So, the iron ore stock's looking good, and, it's an interesting contrast in relative strength. Now, a stock that I haven't talked about, but someone posted this on a Facebook group, and well done to that person. SIQ, it's just a classic example. I remember seeing them post it and think, oh, that's sweet, I'm going to trade that, and then, of course, I missed it and forgot about it. So SIQ, break up on massive volume, consolidate and break up. So this is just classic massive earnings, gap up, breakaway gap, and then a follow through. So, I've said it before, I'll say it again. If you're time poor and you just want one setup, I swear this is the best. The breakaway gaps is just, if I could only do one thing, it would be breakaway gaps, right? And it'd be waiting for the breakaway gap or massive volume, waiting for it to consolidate and buying the breakout. Incredibly good signals. And now, just moving on, in terms of stocks that I'm currently kind of stalking, let's go through a few. On the New York Stock Exchange, Keys, massive gap up, big volume on earnings, and it's based in sideways. It's all inside bars, and then we have an all-time high here. So we have a whole bunch of things coming together with this stock that I like. And if this breaks up above all-time highs, then I'm going to be in that, and I'm going to be looking for a pretty decent move. I'm not going to be day trading or anything. I'm going to be swinging it high and trying to get a decent move out of that. Now, I did a Frank's box scan on NASDAQ and Aussie data, MMS. So, big move up. The volume wasn't anything to write home about here, but on this move up, but it's it's a nice, powerful move still on decent volume. I mean, the volume did expand, like a couple, 200-300% probably there compared to the average. So it's not too bad, but it's not huge volume, which I ideally like to see. But now we're tightening, and so MMS is an interesting setup. Moving on to a few NASDAQ stocks that came up in Frank Scan. So ENLV, total risk, high risk thing. There's quite a liquid, not many of them out there, but certainly can move. And if I can actually get a fill on this thing and it breaks out, I'm going to take a small position on that and just have a little crack at it. So ENTG is, this is an example of where I think the money is flowing into these stocks. And so we have software stocks breaking low, and then we have some of these tech stocks and semiconductor stocks, more accurately, at all-time highs and breaking up. And so, there's always things going up and there's always things going down. And it's just, for me, it's a matter of finding the strong sectors and the weak sectors and concentrating on the strong ones, obviously, right? So now, the other one that I like is a NASDAQ stock, EXLS. It's at all-time highs here. It's had this huge sideways movement here. It's broken above all-time highs a few times, and it's just formed a Davis box here. And so I'm watching that one. That's setting up pretty well. Now, there's another way I sometimes trade, which I just want to quickly go through, and this is still based off breakouts, right? It's just a different way to enter a breakout. So Lululemon, I've talked about before. I love the company. They make really comfortable athleisure stuff. Most women have their yoga pants. Most men don't have any of their stuff, but I bet you with time they will. And so now, anyway, this had a massive gap up on earnings. These companies just printing money, right? And then it's fallen down because the market's been crap. It's had a bit of a pullback. Now, there's so many ways that I target these breakaway gaps. Obviously, my preference is for this to break up, consolidate sideways, and break up again, and I'll just pile into it, right? But likewise, if this stock and a lot of these breakouts, stocks have a tendency to pull back, to the area between their 50 and 100-day moving averages, and that's what I kind of look at. And so if this can just pull back, and it's got a confluence of moving averages down here, we've got some support. If it can pull back down to this little box I've drawn around this green line, which is 100-day. Then I can just enter and just put a really tight stop below these lows, and for me it provides a risk reward ratio that's really ridiculously good, I like trading like that occasionally. It's pretty rare, only every now and then. However, this is an example of one that I'm going to try and target if possible, right? The other stock that's closely related to Lulu, obviously, is Nike. And Nike's not reporting, I think, till the 24th or 21st or 4th, something like that, of September. So a few weeks away. It's just triple top here on Nike, okay? And so, I guess there's a lot of people bearish on that, but triple tops sometimes form ascending triangles and then break up to the upside. And, you can view that as a triple top, or you can view that as a massive base. I mean, who cares? As long as you come up with a plan and try and make cash from it, I mean, it doesn't bloody matter, but my view on this is I'm going to wait for earnings and I'm going to see what happens. All right. Okay, so now, just to leave everyone with I did a tri-point weekly resistance scan, which I do every week. Tiny little tick, like LLG, high risk stuff. But when markets get dicey, not that they're dicey at the moment, but these things are so uncorrelated to the general market. The Dow can be down 1,000 tonight, and this thing can be up 30% tomorrow. So that's why I kind of like them. I just for short-term momentum scalps, breakout trades, they definitely have a place in a trader's toolbox. And TVE is setting up as well. It's massive base, so cheap. I mean, this thing could be bankrupt any day now. Okay, now last thing, PLS. I see this just so often. I've talked about it before. People trying to pick bottoms. They were trying to pick a bottom. I had friends trying to pick a bottom on this thing. Where was it? I don't know. Probably back here at about $1, and then they tried to pick a bottom. At 60 cents, and then they're trying to pick a bottom here at 45 cents, and now we're here at 35 cents. And all these people trying to be smart, trying to find little double bottoms or tiny little inside bars that they can break up. I mean, maybe for really, really, really short-term traders, but if you're a trend trader and you're trying to catch major trends and ride things, then look at all you need to do, for me, my mind, is look at the moving averages and ask yourself what way they're pointing. They're pointing down, and the stock's going down as well. All right, catch up.